Oh, hello mga students, welcome back. Kanina pinag-usapan natin or sa isang video lecture, pinag-usapan natin yung BEP analysis or the break-even point. Sa ngayon naman, let's talk about CVP analysis, in particular sa target profit, no? Ano bang ibig nito sabihin na target profit? Well, alam naman po natin, 'di ba, na yung break-even point natin is the point wherein your total revenue is equal to your total costs. Revenue equals cost. So, pag pinag-uusapan natin yung target profit, ito yung on the basis of your BEP or on the basis of your break-even point, no? We can define a target profit and we can identify what should be the number of sales either in units or in peso value for us to achieve the target profit. Okay, so applying the principle of your BEP. Okay, ginagamit natin ito para ma-determine natin kung sakaling kinakailangan natin, let's say, ng 500,000 na profit, ilan ba dapat yung ating benta? Okay, ilan ba yung benta mo in terms of the number of units that we have to sell or the equivalent peso value? Okay, ito cost volume profit analysis po ito. Why? Because here we will be analyzing yung cost, yung volume, and then the profit. Only that the starting point of our CVP analysis is your break-even point, which is this part na ito, no? Itong part na ito, Rx equals VCX minus FC. And remember that at the break-even point, there is no profit or loss. So for us to achieve a profit, no, kinakailangan ma-meet muna natin. Yung minimum natin is your break-even point. Okay? So this is the starting point. So if we need to define a specific amount of profit, so we have to check also, we have to adjust our formula, our equation. Now, examining shifts in cost, volume, and the resulting effects on profit is what we call your cost volume profit or the CVP analysis. Okay, so applying these concepts, no? So kung makikita ninyo, nandito tayo sa equation na ito sa formula na ito, yung kabuuan, including the P, at yung cost mo is the variable cost and then the fixed cost. Yung volume mo is the X, diba? At saka yung profit mo is your P here. Now, an important application of the CVP analysis allows manager to set a desired target profit and focus on the relationships between it and other unknown or other known income statement amounts to find an unknown. Okay? So based on the available, parang sabi ko nga minsan pag nag-explain ako, parang nagsusudoko lang tayo based on the given available information. How can we identify? How do we determine those that are unavailable as of the moment? But in any given case, we can compute the unknown because of the given information. So one common unknown in such applications is the sales volume that is needed to generate a particular profit amount. Okay, so let's talk about yung target profit in terms of the fixed amount, no? Fixed amount of profit. Why target profit? Because we are targeting a specific profit here. Now, let me just read this to you para mas maipaliwanag kong mabuti. And you can also follow me, no? Because contribution margin represents the sales dollars. Again, this is our reference is a foreign author. So dollar ang kanilang denomination, remaining after variable cost is covered. Each dollar of CM generated by product sales goes first to cover fixed cost and then to produce profit. So doon sa ating variable cost relationship na pinick up natin from the previous video lectures, di ba? Yung ating total contribution margin, it's the na binubuo ito ng iyong fixed cost at saka ng profit. So para ang ginagawa nito, yung contribution margin, okay, i-cover muna nito yung mga fixed cost before any profits na. Of course, kung hindi kayang i-cover ng contribution margin yung fixed cost, we are operating at a loss. Okay? After the BEP is reached, each dollar of CM is a dollar of before tax profit. Ang sinasabi lang dito, pag na-cover mo na yung fixed cost, ang mga susunod dyan is, i-cover na natin yung mga profit. So kung malaki yung ating contribution margin to cover your fixed cost, di mas malaki yung ating take home, no? Yung ating before tax profit. Remember that meron tayong before tax at saka after tax. We will be talking about it later on. Tignan niyo ito. Profit can be treated in the break-even formula as an additional cost to be covered. Inclusion of a target profit changes the break-even formula to a CVP equation. So kung ang iyong ang iyong break-even analysis or the break-even point ng formula is minus parang going back doon sa ating X is equals to fixed cost divided by contribution margin. Dito, i-insert, isisingit natin yung target profit. Kino-consider natin siya as if it's another cost, no, to cover para ma-achieve natin yung target profit. Ano ibig natin sabihin nito? Please take note of this one. Our target profit before tax. If this is your equation, no, and we want to emphasize the profit, which is the amount that we will get after deducting the variable costs and then the fixed costs from the revenue. Okay, playing laruin lang natin yung ating equation, Rx minus VCX equals FC plus profit, yung target profit natin, wherein eto yung FC dito, yung fixed cost mo, transfer natin sa kanang bahagi. Okay? And then removing the R minus VC. Okay, X will be equals your fixed cost plus profit, target profit divided by your R minus VC, which is your contribution margin. So, ang mangyayari dito, kung ang break-even point mo is X equals FC divided by CM, ngayon, kasi we treat the target profit as an additional cost, no, that we have to cover. So, we have to define the target profit para ma-include pa siya dito. So, kung ang contribution margin will have to cover not only the fixed cost but also the target profit. So isama natin siya dito sa ating numerator. Kaya X is equals to fixed cost plus the target profit divided by your contribution margin. So ganun lang din naman siya. No, applying it in an illustration using your Sesame Company example. Take note of this one. If in units, our profit before tax na desired is 3,300,000. Simply, kung ang ating fixed cost sa previous illustration is 4,400,000, i-add lang natin itong 3,300,000. Yung 4,400,000, gamit lang po natin yung previous illustration, niro-roll over lamang natin siya. At i-roll over natin ito sa mga susunod na illustrations. So 4.4 plus 3.3, ang numerator ko sa taas is 7.7. Pag divide natin yan sa 11, we will get 700,000 units, no? Or clocks siya dito. Pag minultiply natin ito ng magkano yun? Yung ating selling price doon. Okay? That is, magkano nga yun? Nakalimutan ko na tuloy. Teka, let me just remember. Yung 40. Okay? Yung selling price natin na $40. Pag minultiply natin yan doon sa 700,000, we will get 28 million. Okay? Or, using your contribution margin ratio, you will get 7.7 million divided by 27.5% equals 28,000. 28 million. Okay? Please take note, ito lamang po yung yung changes sa ating equation, yung pinakita ko na rin dito. Okay? So kaya kanina dumiretso na ako dito sa baba. Yung 4,400,000 plus 3,300,000 divided by 11. Kasi ito naman na yung ginagamit natin na equation. Pag target profit, pag given yung target profit, so yung formula natin ng break even will be your target costing or target profit na computation. So, dinadagdag lang natin sa numerator yung target profit. Okay? Now, this is a target profit before tax. What happens if after tax? Remember that your after tax is simply your profit before tax. Okay? Times 1 minus tax rate. So, kung 30% yung ating tax rate, ibig sabihin kung ang profit before tax ko ay 100,000, we times we will simply remove the 30% tax Kasi 100% in your profit before tax includes 30%. So parang dito, bakit siya 1 minus tax rate? Kasi if 1 represents 100%, kung 30% yung ating tax rate, 1 minus 0.3, ang matitira dito 0.7. So parang 100,000 times 70%. Okay? Oh, tignan niyo dito, ano? What happens if our after-tax na profit is 3.3 million? That is already, dito ang example natin na tax rate is 25%. Ibig sabihin, ang ating 3.3 million is 75%. So for us to get your 100%, we simply divide 3.3 million sa 25%. In ito ay ang relationship kung ang plus ang kanyang kabangga ay minus, ang times ang kanyang kabangga ay divide. Diba? Kung ito, times tayo dito, yung profit before tax mo times yung 1 minus tax rate, dito, yung profit after tax is divided by 1 minus tax rate para makuha natin yung profit before tax. So kung ito, kung from the profit before tax na 100%, para makuha natin yung profit after tax, multiply natin ng 75%. Dito, from the profit after tax, divide natin ng 75% para makuha natin yung 100%. I hope you understand what I am talking about here. Okay? So 3,300,000 divided by 75%. Okay, ang answer natin dito is 4,400,000. Now, 4,400,000 na yung ating target profit. O plus 4,400,000, we will get 8,800,000 divided by 11, that is 800,000. Yun yung ating units. Pag minultiply natin yan sa 40, we will get 32 million. Or applying your contribution margin ratio, 800,000 divided by 27.5%, we will get 32 million. Okay? So hanggang dito lamang po ang ating short video lecture on target profit before and after tax. Please let me know kung masyadong mabilis, pwede nyo naman po yung i-pause or ask kayo ng questions, either alam nyo na kung saan ako hahanapin or you may comment down sa video lecture na ito. Okay? So I'll see you later. Bye-bye.